Welcome to the Deep Dive. Today we're digging into Trip.com Group Limited.
Right, a major player in the global travel scene.
Absolutely. They're basically a one-stop shop for travel hotels, flights, tours, even corporate stuff.
And they've got a really strong foothold in Asia, but they're definitely expanded globally.
For this deep dive, we're using their 2024 annual report, the Form 20F.
Yeah, it gives us a great look under the hood. Our mission today is basically to pull out the key stuff.
Like how their different business segments work, their financial health.
And importantly, their strategies for growth and how they plan to, create value for shareholders.
Okay, let's get straight into it. How do they actually make their money? Let's talk business segments.
Sure. The report lays out four main ones plus a kind of other category.
First up is accommodation reservation. Seems pretty clear, right? Commissions from hotels when people book.
Exactly. And the growth here has been, well, pretty dramatic.
Tell me about it.
Okay, so in 2022, it was RMB 7.4 billion.
Right.
Then in 2023, it jumped to 17.3 billion. Wow. And in 2024, it hit RMB 21.6 billion, which is almost 3 billion US dollars.
That really shows the travel recovery, doesn't it?
Absolutely. Post-2022, things really took off for them in that segment.
Okay, what's next? Transportation ticketing.
Yep, similar idea commissions, but for flights, trains, you name it.
And the numbers, also strong.
Very strong.
Yeah.
RMB 8.3 billion in 2022,
Yeah.
then 18.4 billion in 2023, and landing at 20.3 billion, about 2.8 billion US dollars in 2024.
That's huge.
And get this, they offer flights from over 640 airlines.
640. That's incredible reach. No wonder people use them.
It definitely gives them a big edge.
All right, third segment, package tours.
This is where they bundle trips together. Revenue's recognized when the tour actually departs.
How's that been doing?
Also significant growth, though, from a lower base. It was about 797 million RMB in 2022, then leaped to 3.1 billion in 2023.
Big jump.
And reached 4.3 billion RMB, or around 594 million US dollars in 2024.
So people are definitely liking those prearranged, hassle-free options more.
Seems that way. And the last main one is corporate travel.
How does that work?
It's more of a service fee model. They manage business travel for companies.
And the growth there?
Steady. 1.1 billion RMB in 2022, 2.3 billion in 2023, and 2.5 billion, about 343 million US dollars in 2024.
So businesses are increasingly outsourcing this stuff. Makes sense.
Definitely. And then there's that other category.
Right. What falls under that?
Things like online advertising on their platforms, some financial services, that kind of thing.
And that's growing too.
Yep, 2.5 billion RMB in 22, 3.5 billion in 23, and up to 4.6 billion, or 634 million US dollars in 2024.
So those other bits are becoming quite significant contributors.
They really are. And you can see how these segments probably seed into each other. Get someone booking a flight, maybe they'll book a hotel too.
True, that network effect. The report also talks about mobile use, right? Everyone's booking on their phones now.
Oh yeah, that's a huge trend. They've clearly put a lot of effort into their apps, making them work across different devices and systems.
Standard practice now, but essential. So how do they plan to keep this growth going? What's the strategy?
Well, it looks like a multi-pronged approach. First, they're really leveraging their strong market position and huge user base.
How many partners did the report mention?
Over 65,000 ecosystem partners.
Wow.
So they use that scale to attract even more collaborators. Second, they provide tech solutions to those partners.
So helping hotels or smaller agencies get online and access Trip.com's users.
Exactly. It's positioned as a win-win.
Smart. What else?
Expanding globally is a big one. Forging more partnerships internationally.
Right, building that worldwide presence.
But they also mention investing in complementary businesses, though they do say no material acquisitions since 2020.
Interesting pause there, since 2020. Maybe more cautious.
Could be. They do acknowledge the risks, like dilution or hurting financial performance.
Fair enough. And strategic alliances.
Yeah, another way to expand reach without buying companies outright. But again, they note potential risks associated with those too.
Okay. And I saw something about content sharing features. Since 2018.
Right. That's all about engagement. Letting users share experiences, discover new places right on the platform.
Like building a travel community.
Pretty much. Keep people coming back, drive more bookings eventually.
Makes sense. And AI. Everyone's talking about AI.
They're definitely using it for personalized recommendations, showing you trips you might actually like based on your history.
Increases the chances you'll book something.
Exactly. And for more effective marketing too. Targeting ads better, optimizing spend.
So lots of different angles. Any specific initiatives mentioned?
Yes, several. They've got cross-marketing deals with major Chinese airlines, hotels, banks, even telcos.
Tapping into existing customer bases.
Precisely. They're also working with smartphone makers to get their app pre-installed or easily downloadable.
Smart move. Get it on the phone from day one.
And they're always testing new mobile channels, looking for the next way to connect.
And internally.
Big focus on using tech to improve their own operations, make things run smoother.
And you mentioned sustainability earlier.
Yeah, they state a commitment to sustainable tourism, looking into carbon mitigation. That's increasingly important for consumers.
Good to hear. Okay, sounds like a solid plan, but what about the roadblocks, the challenges?
Oh, plenty of those. Competition is, well, intense.
From whom, mainly?
Other online travel agencies, obviously. Traditional agencies still exist. But also hotels and airlines trying to get direct bookings.
Cutting out the middleman.
Right. And now even content platforms and social networks are jumping into travel.
Wow, crowded space.
Very crowded. Plus, you get seasonality.
Ah, yes. The summer rush. Q3 is usually strongest.
Typically, yeah. That means their results can bounce around quarter to quarter.
And being tech-based, their platform has to work, right?
Absolutely critical. Any major outage is a huge problem for business and reputation.
And keeping up with tech changes.
Constant challenge. Requires ongoing investment.
The report also flags reliance on key executives.
Yeah, common risk. Losing top people could be disruptive.
And issues with third parties, like bad reviews.
That's mentioned too. Online reputation is so crucial these days. Negative buzz can really hurt.
What about cybersecurity, handling all that user data?
Massive concern. They specifically mention complying with PRC cybersecurity and data protection laws.
The PIPL, but
Exactly. Big fines, losing licenses. The stakes are high if they mess that up.
sounds like the regulatory side in China is pretty complex.
It is. They also mention risks like potential bad debts as they grow, market fluctuations hitting their investments.
And the challenges of going global.
Yep. Different laws everywhere, constantly changing. It's a minefield.
Plus, broader PRC economic and political factors.
Acknowledge risks. Government oversight, legal uncertainties, currency controls. It all plays a part.
And things like antitrust scrutiny.
That's mentioned too, along with security reviews for foreign investment. It's a complex environment for tech companies there.
And finally, the VIE structure.
Right, the variable interest entity structure.
Yeah.
They know the potential difficulties in enforcing those contracts due to PRC regulations. It's a known structural risk for many companies operating in China.
Okay, that's a really comprehensive look at the business side, the strategy, and the risks. Let's pivot to the financials. You mentioned strong revenue growth in 2024.
Yeah, across the board, really significant increases compared to 23.
What was the total revenue number again?
For 2024, it was RMB 53.3 billion. That's about 7.3 billion US dollars.
And the growth rate.
102% year over year. Just massive. Really shows that travel rebound.
Incredible. How about profitability? Gross profit.
Also very strong. RMB 42.6 billion or 5.8 billion USD. That was up 116%.
So gross profit grew even faster than revenue, suggests maybe better cost control,
Potentially, yeah. Good sign on the margin front. But then you have operating expenses.
which also went up, presumably.
They did. Product development costs rose. Sales and marketing spend was significant in 2023 at 9.2 billion RMB.
Investing in growth and capturing that rebound demand.
Seems like it. General and administrative costs were 3.7 billion RMB in 2023 as well, likely due to hiring, marketing pushes. The usual suspects during growth phases.
Okay. What about other income? Sometimes interesting things hide there.
Well, in 2023, they got significant government grants, over 600 million RMB, and some dividend income from investments. But they also booked a really big fair value loss on investments in 2023, about RMB 1.5 billion.
Ouch. So investment swings can really impact things.
Absolutely. It plays a big role in the final number.
Speaking of which, taxes.
Income tax expense was 2.6 billion RMB or 357 million USD in 2024. That's up from 1.8 billion in 2023.
And the effective tax rate.
Actually dipped slightly from 16% in 2023 down to 15% in 2024.
Okay, the bottom line then, net income. You mentioned the investment losses. How did that play out?
This is the key point.
Yeah.
While they had strong net income in 22 and 23, like 9.9 billion and 12.1 billion RMB respectively,
Right. Yeah.
in 2024, they actually reported a net loss attributable to the company of RMB 11.7 billion. That's about 1.6 billion US dollars.
Wow, quite a turnaround despite the booming revenue. So those investment fair value losses were the main driver.
It seems that way based on this. It really overshadowed the strong operating performance, shows how non-core items can swing the results.
Definitely a reminder to look beyond just revenue. What about the balance sheet? End of 2024 snapshot.
Total assets were about 242.6 billion RMB, or 33.2 billion USD.
And anything notable there? Liquidity.
Big improvement in net current assets. Jumped to 38 billion RMB, or 5.2 billion USD.
That's way up from previous years.
Massively up. From just 196 million RMB in 2022 and 16 billion in 2023. So much stronger short-term liquidity position.
That's positive. Oh, what about the other side? Debt.
Okay, short-term debt plus the current chunk of long-term debt was 19.4 billion RMB.
And long-term debt.
About 20.1 billion RMB. Includes those convertible notes due in 2025 and 2029. The fair value was estimated a bit higher at 22.8 billion.
So considerable debt, but the improved current assets help balance that.
Seems to be the picture.
Any quick takeaways from cash flow?
The report shows the ins and outs for financing activities over the last 3 years. Standard stuff like debt movements. They mentioned a centralized cash management policy.
Common for big companies.
Right. And also some detail in cash flows between the subsidiaries and those VIEs we talked about. Reflects that internal structure.
Okay. So summing up the financials, strong operational rebound, great revenue growth, but the bottom line hit hard by investment value changes in 2024.
That's a fair summary.
Now let's talk shareholder value. What are their plans moving forward?
Well, they formally adopted a capital return policy back in late 2023, starting in 2024.
What does that mean in practice?
It gives the board flexibility. They could do discretionary share buybacks each year, or declare discretionary cash dividends, or mix both.
Discretionary being the key word there, not guaranteed.
Exactly. The board decides based on, financial health, cash flow, investment needs, market conditions, all the usual factors.
So they tailor it year by year.
Right. It gives them options.
Any mention of share buybacks specifically?
The report mentions a share repurchase program exists. Buying back shares can boost earnings per share and potentially the stock price.
And dividends. Did they pay any in 2024?
No. The report states no dividends were paid to ordinary shareholders in 2024.
But they did before.
Yes, significantly.
Yeah.
They paid out RMB 5 billion in dividends back in 2023.
So the policy allows for it, but they chose not to in 2024, perhaps given the net loss in investment climate?
That would be a reasonable assumption. Shows the discretionary nature in action.
Also worth noting, those employee stock options and restricted units looks like quite a few outstanding.
Yeah, significant numbers under their incentive plans. As of early 2025, options for over 90 million shares combined under 2 plans, plus restricted units.
That could mean future dilution for existing shareholders when exercised, right?
It's always a factor to consider, yes. Standard practice for tech companies, but it does impact per-share metrics down the line.
Okay, so we've got the business, the financials, the shareholder return plans. What's the overall assessment looking ahead? How confident does management sound?
They express confidence, stating they believe cash flow from operations and financing will cover their needs for at least the next 12 months.
So short-term stability seems okay in their view.
That's the message. But of course, they also flag all those risks we discussed.
Right. Competition, regulations, economic conditions.
Exactly. They include the standard disclaimer about forward-looking statements too. Actual results could vary significantly. Always important to remember.
Especially in travel, which can be so volatile. Anything else noteworthy? Accounting changes.
They mention adopting a couple of new accounting standards, but they don't expect them to have a material impact. Routine compliance stuff, mostly.
And they confirm they're okay as a going concern.
Yes. They concluded they'll be able to meet their obligations.
And the final tally on debt again. End of 2024.
Total debt obligations stood at RMB 40.6 billion, or about 5.6 billion US dollars.
How much of that is due soon?
About half. RMB 20 billion is due within 1 year. The other 20.6 billion is longer term.
Okay. So wrapping up our deep dive on Trip.com Group's 2024. It's a story of really strong operational recovery and revenue growth.
Definitely. Driven by that travel resurgence.
But significantly impacted on the bottom line by those investment fair value losses, leading to a net loss for the year.
Right. A crucial distinction.
Strategically, they're leveraging their scale, tech, partnerships, and expanding globally while navigating intense competition and complex regulations, especially in the PRC.
And they've put in place a flexible capital return plan, allowing for buybacks or dividends, though none were paid in 2024 after a large payout in 2023.
Management seems confident about the near term, despite the acknowledged risks.
That sums it up well.
Yeah.
Which leaves us with a thought for our listeners.
Yeah.
As this global travel recovery continues and platforms like Trip.com keep evolving,
Hmm.
what do you see as the biggest opportunities and maybe the biggest hurdles for companies like this in the coming years?
Good question. How will tech, changing traveler habits, maybe even geopolitics reshape things?
Exactly. It's a really dynamic space to keep an eye on.